for none. I lay on one is number one, know the chosen ones. Yeah, I got the flow, spitting like I'm shooting from a gun. Hex to the moon, floating in the sky. Not a nine in this bitch, yeah, I know you feel the vibe. Pulsechain, no ship is saying, yeah. Energy of blame. I'm sipping on that potion, and it's like it does day. Ain't feel it, money glitch, chasing dollar sign, yeah. Pockets full of green, yeah, you know I'm on that grind, yeah. I lay it one is number one, we cannot stop now. A million fans, I can lie, I'm on fire now. Yeah, I can fuck now. Hey, on Nados.
What the hex is you guys talking about?
Well, hello, buy pressure.
Good morning, you guys. When Bob's.
Papa Boner, let's bring back the team win state of mind. Everyone can remember what it was like to have a relentless, disruptive, borderline, cantankerous, and super intelligent community. You have an obligation to pull it together. Yes, that's right. Also, yeah, remember when there's green monthly candles, people feel the dopamine as well, friends. Remember, I've been lighting the candle every single day just to make sure that we get to a better place because we all deserve it.
Why did you buy ETH at 3.7K Brev? It would have been nicer to buy it at 1,400, wouldn't it have? When it dipped there. Wah! Yeah, no one knows with perfection where markets are going to go.
What the heck?
Satoshi, please give me keys to early blocks, please. Thank you. In poorly written, uncapitalized English. Man, I shouldn't have printed so much of this. This sucks. Been a while since I read comments, and it sucks.
I'm not as smart as Bob.
Hey, these questions suck. I mean, it sucks. Who asked you to print out these pre-approved questions that you know what I'm saying? These questions you filtered, right? Some of it was okay, like the whole why you did that trade with Ethereum last year. Why you did that trade? Oh, well, you know, it would have been great if I got it at 1,500, right? It's hard to tell the market. Nobody could tell the market. Nobody could tell them. Nobody. Yeah, faux pas. All these sounds you making because you tripping up your word.
Get ready to get rich, motherfucker!
Rebuild trust. Let's talk about rebuild trust. Go look at the charts that you guys made with your selling, okay?
So, explosive diarrhea. Oh, wow, I just get it. Instead of diarrhea. Diarrhea. That's good, sir. That's good. Very, very creative. I wish we had some green candles to accompany us. What the Hex? DJ Cryptomatic hosts episode 147 of What the Hex, featuring SJ, Papa Boner, and Toby with his lovely mustache. This is awesome, sir. Well done.
Going on, ladies and
let's crank it up a bit.
Of course, the you know, the
friends, these people, they're all committed, all come out. Lovely people, sharing thoughts, ideas. Yeah, it gets spicy with stuff out here, but it's freaking crypto, friends. Crypto's always been spicy.
Listen up. You didn't lose your money. Now, you have your... Technically, you kind of lost your money.
The best prediction I've got from the dev team on the Pulsechain launch, which is the world's largest free airdrop, which is what most of you guys probably care a lot about, especially new viewers, mid-May. That's their best guess. But who knows? Their guesses could be as bad as mine. We'll see. It's funny when I get messages, not only have people sacrificed coins that are the wrong coins, but they've even sacrificed them on the wrong networks. You're like, wow, that takes a lot of effort.
What the heck?
What the heck?
What the hex?
What the heck?
What the heck?
Cairo in the building. Yes.
Hello, guys.
Oh, man. Welcome to the last episode of 2025.
We did
Thank
it!
God.
Ah,
Thank
yes.
God.
Peter,
We
you
survived 25.
yes, we survived 25.
What a year.
Wasn't that always the slogan in the years prior? They say survive till 25, you know, when we were in the wild bear markets of 22 and 23.
And you did it.
And
Don't
we
you
did
feel
it.
more healthy? You're still here.
Yeah, together with all of you guys. Let me just adjust the volumes a little bit, crank up things here.
Who's coming
I
in
gotta
too
tell
hot?
you,
Me?
like, SJ is a very tough act to follow because she's the positivity princess.
Positivity
and me,
princess.
I'm like the really grumpy, angry guy that's constantly
Yay!
shouting
We
into the
love-
microphones.
You come to the right place. We love grumpy and
Are you the Oscar the Grouch of the community, Cairo?
And you, depending on like the thing I'm upset about, yes. All right,
Nice.
whatever is like on my nerves at the moment, well then absolutely I'll be Oscar the Grouch.
You know, to preface this, everyone, in case you don't know Cairo, rising star in the community,
Yes.
huge on the bigger picture and how it has to do with our stuff. Not always pleasant news, but I've been so amazed at the specific nature and the accuracy that you provide. It really gets my head back on its freaking foundation where it should be, not, you know, green candles forever type of attitude, not wind pump, not, you know, what are the powers that be, or like, surely we can make it. If we didn't have this clarity from you, we'd be banging our heads against the wall. So thank you for coming here today.
I'm very glad that I can provide that. So I guess I should probably tell people, like, who the hex am I? So I'm Cairo Copeland over from Reinvent-Ideal.com, which was not a crypto business. It was mostly just a coaching business for guys that I'd been doing ever since I had retired from TradFi. I was buried kind of like deep into the layers of the beast with TradFi, working for the big green machine known as Fidelity, and I did all sorts of stuff for them. At first, I was just a stockbroker. Then I became a bond broker, working in their bond department, and then was a financial advisor at one of their branch offices, and had done that. I've been in that industry for 10 years, and what like really awoke me to crypto was in 2017, where we are having the first bull run that really put Bitcoin on the consciousness of the entire world, and like everybody was learning about it for the first time. It'd been around much longer and people had heard of it longer, but that was like the real big one. I remember it was that bull market got so big they made a joke about it on the Big Bang Theory. All right, so when you do that, that's kind of a top signal, at least at that time. And what happened was people were constantly calling up the company that I was working for, asking, "Hey, do you guys trade in Bitcoin and crypto?" And of course we didn't, because we were TradFi. And I was so annoyed by these calls. I was so tired of them. What I wanted to do at that point was, okay, I'm going to learn all about this crypto thing so I can tell people how stupid they are for buying it. So I want to learn it so I can tell people what a scam it is and how stupid they are for buying into it. Because I was of the TradFi mind, we all thought that. But the more that I investigated it, the more I learned about it, the more I became convinced of the opposite. And that what we were doing in TradFi was the wrong thing. It was the dumb thing. So I'd been invested in crypto ever since, had been involved in HEX since the 2020 market that we had, because that was a big story at the time. Just hear that like somebody thinks they can do better in Bitcoin. Oh, this will be good. Grab the popcorn and everything.
But actually, if I can interject, the Fidelity when you worked there was because I'm always curious about the gatekeeping aspect of crypto. Can you say, or can you, maybe you're not allowed to talk about that, but was there like,
there's no NDAs that
there's no
continue.
NDAs, but was
Spill
there
the
like a
beans.
company internal policy to, if anyone comes to you and asks about crypto, just don't talk about it or shut them down or tell them it's bad, like on purpose, like a guidance?
Yeah, it was
like
that was the case back then. That was the case back then.
In 2017, I mean, yeah.
Yeah, it might be different now because
Yeah.
now
What year was
Fidelity
this?
offers
Of course it
Bitcoin.
is. Yeah.
What year
Thank you very
precisely was
much.
it? Yes. Cairo, what year exactly was this when you were in Fidelity with that attitude?
All the way up till the year 2022. And first started working for them in 2016. And like before then, I'd worked for another company starting in 2012, much smaller financial services company.
Just curious, because a lot of people don't believe me when I say as early as 2014, a lot of these securities brokerages, a lot of the trading desks were already. I mean, we were providing the trading consoles, the security around that, and then we were acquired by a bigger company that actually made the trading consoles and provided the throughput to make sure that everything was in sync. But there was a request from the traders there, but as early as 2014, end of 2014, I got the first request saying we want these buttons dedicated to certain crypto assets, mostly
That's
just
right,
Bitcoin, right?
Fidelity had been dabbling in Bitcoin since 2014. I think they even started mining some Bitcoin around then.
Excellent. So that's the big conspiracy revealed, right? Is that they had their fingers in that pie much earlier than we all thought, and they were lobbying against it in one sense, or they were accepting the lobby against it while trying their hardest to kind of capture it even back then. Is that accurate?
Yeah, you can kind of think of it that way because it's a quite a catch-22 being a financial advisor or some company that's supposed to be a financial advisor company. It's like you're telling people how to do things that would make them not need you. And then also, if you're really good at doing the things that you claim you can do, like, telling people how to make money, why would you be working? Why would you start a business? Why would you start a company? So like the deal is that there is kind of a duality to the business in the sense of like you tell people everything they know, but you don't tell them everything you know. When you're the head of one of these companies, like right now, it's Abigail Johnson. Same goes with like Jamie Dimon. He had his come to Jesus moment of Bitcoin recently. Larry Fink,
very recent, at least in public. I think in secret he might have, always been on that train. But
his public confession is all it was. He probably believed in it all along and just didn't want everyone to know what he knew. So there is a duality to it, where like what they tell you is not the full story. There's more behind the scenes than what they tell you. And that also goes for like people working for them too. Like I did not know as anywhere near as much of what they were doing behind the scenes while I was working for them. Even us guys that were kind of like on the front lines, public facing for the company, we knew very little about what was going on behind the scenes.
But isn't it funny that we have the breaking news today here that they are now putting up a Satoshi statue at the New York Stock, inside the New York Stock Exchange? I have a little bit like mixed feeling about this, to be honest, because as we just discussed, they gate-kept it all along and said it's the worst thing that ever happened, and now they got their bags, they're all in, they bought the whole bear market long.
Bitcoin. Now it's cool.
Yeah, now it's fantastic. Yeah.
That's not Satoshi. That's the Grim Reaper. That's my portfolio right there.
Yeah, the meme coiners were also quick
That's more accurate.
Flip that on its head. But just to finish the story, Cairo, then how did you get into the Richard Hart ecosystem of things? Like what piqued your interest?
Was it end with us?
Was it the tokenomics? Was it Richard? What was it that piqued your interest about this ecosystem?
Good question. I mean, I had Bitcoin, so I got some HEX for free. But like what really attracted me to it was the fact that it was going up faster than anything else. I mean, if we're all being honest right here, what draws us to crypto is not the technology, unless you're fast, Abdul, but what draws you here? What draws you here is how you can make life-changing money because we got exponential returns that come out of these assets. And that's what caught my attention on HEX. Didn't even know who Richard Hart was for like the first 2 years that I had it.
Okay.
And also, like what got me like kind of ingrained in the community here was, well, like, we got to give all credit to RH Max for putting me on the map at the very first Pulsechain conference that he ran. Because at that time, I wasn't planning to like come out as a crypto investor or even a hex investor or any of that stuff. I wasn't planning to ever get involved in this, but like around that time, this was the summer of this year. There's a ton of infighting in the community that I just didn't like seeing. Lots of division, and lots of people saying, "Oh, it's going to be all over," and we blew this cycle. And I wanted to take what I knew, like, no, we're not blowing this cycle because this cycle really hasn't gotten going yet. We're not missing out on anything, which was basically the context of my speech. I wanted to make sure that that message got out there so that everybody knew why it was we were having such a rough year. And that's what I try to do on my streams, is we also give context to like why we are having such a rough 2025, and it's probably going to finish out being a very disappointing year anyway.
Yeah.
But not 2026, right? There's a silver lining here.
There's a silver lining
not
here.
2026, I don't think. I mean, it's still like too early to call, but I can see a lot. I can tell you a gazillion reasons why I think 26 will be the year that we hoped 25 was.
Banner cycles.
I'm hoping that we have enough time in this show to hear every one of gazillion reasons.
Let me just set the stage for the, if I may, for the macro situation. We need to talk about that. So obviously the big news yesterday, Jerome Powell,
Money.
Another 0.25% cut, and at the same time he gave a speech that he doesn't foresee any hiking of rates in the near future. So that is what got everybody, in crypto all bullish and excited. Then when I look at the charts, though, this is my little battle machine, my trading desk here. Of course, gold has moved up. There's a green candle here. Am I sharing? Yes, I'm sharing. We have
Yellow rock, go up.
Das ist eine Hanukkah-Geld.
The S&P 500 pumping. That's a nice reaction to this news. Flirting with all-time highs, not quite there yet, but could happen tomorrow. And then the S&P 500, serious green candle. With definitely all-time highs. If we zoom out, it's a new all-time high for the Dow Jones. But what hasn't moved really is Bitcoin and Ethereum so far. Ethereum even with a serious drop. Bitcoin mostly sideways for now. We're going to look at the charts in more detail later with Toby. What, Cairo, do you make of this? Can you break down why we see this reaction in traditional finance? We see a positive move, and crypto, where everybody was hoping for yesterday's announcement, not really moving yet.
Yeah.
Also not dropping.
I mean, are you so sure that these moves today in TradFi assets are, in fact, a reaction to yesterday's news? And if so, what do you point to confirm that?
Yeah.
Okay, because here's what I'd say is the decision yesterday to lower interest rates, we knew about that long in advance.
Priced in.
All we had to do was look at the 2-year treasury, because the 2-year treasury leads the federal funds rate. And the federal funds has to catch up to the 2-year treasury because it's the market telling the Federal Reserve, hey, you guys are behind and you need to catch up. The other thing that we got to bear in mind here is like, well, why is the stock market going up? And particularly, we want to look at what stocks are going up. And what was that, Peter?
Nvidia,
yes. The stocks are going up. Nvidia, and then also Google, Facebook, Meta. And,
actually, Nvidia, not so much. I have the Nvidia chart here for shits and giggles. It's not that convincing, but yeah, it's all part of the S&P 500, I guess.
It's looking to be more like the S&P 7 than the S&P 500 because it's mainly the Mag 7 that are getting all the money. In fact, they make up the top 10 makes up about 40% of the S&P 500 entirely. And why is that? Like, how did it get that way? And is that actually the best way to run a stock market? I would argue not. But here's why it's happening. You ever heard of the passive bid?
What?
No.
The passive bid.
What is this?
It's
we
called
don't know
passive
anything on
bid.
this show.
Yeah.
We know our
What it
hex, but
Yeah.
we're keen to learn.
Is that when I take
Okay.
my stool softeners?
Well, no, not that.
No.
But you know how everybody's got a 401k or a 403b, a retirement plan that
Oh yes, I got
takes
3 of those.
Yep. Takes money out of your paycheck every 2 weeks or so. Really, it's going to be every week just because some companies run this week, some companies run next week. So every week, new money is being fed to the stock market in the form of 403b and 401k contributions. And most people who have 401ks and 403bs invest their money in what are called index funds. And most popular type of index fund is actually an S&P 500 index fund, because everybody knows the S&P 500, and they keep hearing it keeps going up to an all-time high. And what attracts people to these is that it's very low cost, because there's really no active management in an index fund. It just buys a little bit of each stock in the S&P 500. So we really don't need a manager. We can have a computer run the fund. This fund gets new money every week, and it invests the money according to the allocation of the S&P 500. Now, let me tell you about the world's worst investor. There was a guy, we'll call him Stan, and he did the dumbest things ever. When there was a company that was going down, he started selling. When there was a company that was going up, he kept buying more and more of it on the way up. Stan has another name, though. And see, he's doing the exact opposite of what he's supposed to be doing. But he has another name, and that is the S&P. Because that is what S&P does. When they decide how much weight to give NVIDIA to the index, they look at the biggest company by market capitalization. And when a contribution to a 401k plan goes into an S&P 500 fund, it puts more money into the big companies at the top, like NVIDIA. NVIDIA gets like $7 out of every $100 contributed to it.
Wow.
So it's a self-reinforcing mechanism where the bigger that NVIDIA gets, the bigger it will continue to get because of this passive bid, because most people are too lazy to want to actively manage their 401ks, or they just go with what has the lowest cost, which is an index fund, and they just immediately have their contributions allocated directly to an index fund. And so there's no thought behind it. There's no fundamental analysis. There's, like, people keep saying the valuations on stocks are so high. That's true, but they keep getting higher because it's not based on any fundamental analysis or whether this is a good company or whether its cash flows look great. I mean, they do look like they're a good company. I'm not ripping on them or anything, but all of the ones in the top 10, they would keep getting money whether they were poorly run or whether they were magnificently run, to give the pun to the name.
That's
Doesn't
ridiculous. Hold on, hold on a second. So that's an eye opener, because it makes perfect sense, right? Having participated briefly, thank God, in 401ks back in my younger days, I wonder, doesn't that inevitably contribute to a bubble or a higher market cap than they should have, and then a sell-off from the guys that actually understand the market?
Absolutely. Absolutely. When you look at the rest of the stocks in the S&P, they have not performed anywhere near as well, yet the overall market is doing incredible. But if we look at other kinds of stocks out there, particularly what they call consumer staple companies, such as, you know, the Procter & Gamble's, the Johnson & Johnson's, the toilet paper companies like Kimberly-Clark, and I think Georgia Pacific is another one. They've actually lost money this year. They've actually have negative percent returns on the year. And a big part of that is they make up a smaller piece of the index. So they get less money stuffed into them when index fund 401k contributions are being made. So the deal with the stock market, why it keeps going up, is because it keeps feeding the bigger companies at the top, and it's extremely top heavy. That's why, like, when you see those charts that has, like, you know, it's the red boxes and the green boxes. You see NVIDIA, that box is the same size as almost the rest of the market and tiny little boxes on the other side of it. If
you see one of those charts, that's the reason why. It's because its market cap is so high and it's self-reinforcing. It just keeps getting bigger and bigger as more money comes into it. Now, what could reverse that, I think, would be things like people cutting down on 401k contributions, which could happen, or less people working and making 401k contributions, which could happen as well. Would also be something where like a lot of active mutual fund managers were purposefully not investing in it. See, it's another problem there is like the other funds that are not index funds, the ones where they legitimately try to pick and choose the best stocks to buy. A lot of them are also buying NVIDIA and buying Google, buying Amazon, the big Magnificent Seven companies, because you're given billions of dollars to allocate, and you got to buy what has enough liquidity out there, enough shares for sale to buy. And these big companies in the Mag 7 are some of the only ones that you can buy, because when you got billions of dollars to work with, well, you just can't go and buy a small or mid-cap company with those billions of dollars, because you'll do what's called making the market for that stock, meaning your large purchase order is going to push its price up so high that you by yourself completely wiped out all of the possible gain that was available to get from that stock. And there's no gain left to get out of it based on fundamentals. So they do it for that reason. They also buy, or they also do it because nobody would ever get mad at a mutual fund manager if they lost money on Amazon. Because Amazon's doing bad. The whole stock market's bad. There wasn't anything else you could have invested in. So
hang on. You're saying that because it's trendy right now among average folk to get exposure in ETFs, as you said, and I can, I'm here in Germany. That's definitely the case. I hear that in my circle of friends. They talk about that. They setting up, savings plans for their kids, which is money every month going into ETFs and retail. So that's what we call retail, really playing with ETFs now more in TradFi. That's why you think this is pumping right now. And nobody is checking for crypto, because as Richard posted recently, the Google search results for crypto are not really there as it was in 2017. So is that then
that's just the explanation for like why the stock market is doing well.
Yeah.
And a lot of that is because everything is automated through 401ks and 403bs. You have a constant contribution going in. And then also like the people that have the majority of the money in the stock market is the boomer generation. And they have other ways of accessing the money that they need to not have to sell their stocks. So because they have things like annuities that they're getting their income from, they're collecting Social Security. They have government entitlements that cover a lot of their expenses and everything. Exactly that. They got some pensions. They were last generation probably to get pensions. Yep. They also have Medicare covering their medical expenses, which is their largest expense. The homes that they own all the homes, and they can get equity out of the homes, or they have more than one home providing rental receipts for them. So they have no reason to sell down their stocks, which would undo a lot of this mess. Now, when the boomers start dying, that's different. It all depends on. Yeah, it all depends on like what happens to them, though. The inheritors will probably keep the investments. Depending on is it in a 401k or is it in a regular taxable brokerage account? It all depend on what advice the inheritor gets. But there's probably no disruption in this until boomers start dying. But that's the reason why stocks are doing so well. Now, if you wanted to go to gold, and you want to know why is gold and silver doing so well? Again, it's not because of anything going on with the Fed, at least not yet. The big catalyst in gold and where we really started to see it begin its ascent goes back to the genesis of the Russia-Ukraine war. So when Biden was president, what he did with sanctions on Russia was basically a shot heard all around the world, because Russia had money in U.S. banks and Russia had a lot of money in U.S. treasuries. And the sanctions that Biden put on that is basically they said, hey, your money's not yours. These treasuries are not yours. They're ours now because we're punishing you for what you did. And whatever you think of the war, whatever you think of Biden, whatever you think of any of this politics, what the rest of the world thought of it was, oh my gosh, our money is not safe in U.S. banks, and our money is not safe in U.S. treasuries. So they got to go to where their money is safe, and the first place they thought of where it was safe was gold. They went into gold. They went into silver. Because when we look at who's buying all this gold and silver, it's central banks around the world, particularly China. It is not the everyday investor or people that would have invested in crypto. Because we want to take a look at like the biggest macro picture possible. For us to have a bull run across all assets that pushes every single stock up, that pushes every single cryptocurrency up, that pushes metals up, because there's lots of metals out there that are not doing well, like copper being one of them. For us to have that, what we need is a good economy, and we don't have it right now. Because you need people to have the money to buy these assets. And in order for people to have the money to buy these assets, they have to have incomes. For them to have incomes, they have to have jobs. For them to have jobs, well, we have to have a great economy, and we don't have a great economy. That's why the Fed is cutting interest rates, even while inflation is still above their target. That's why they're talking about printing more money, even while the M2 here in the United States is as high as it's ever been. That's why they got to take these measures, because the economy is slow. So why is crypto down when these other things are up? And it's not because of what happened yesterday at the Fed. I mean, really, if we want to get into like everything Powell said, he said very few things that make any sense at all. He said a lot of things that don't make sense. I can break them down for you. It's because of they each have their own specific catalysts. 401k, it's the S&P 500 stocks. It's the passive bid that's pushing that up. And then with gold, it's central banks around the world that are pushing that up.
But where's
the question?
Sorry, no, please.
Can I? I have to go first.
Peter.
And then Peter comes in.
So Cairo, what do you think? Why is there no alt season?
Why no alt season?
Yeah, we need to pivot to crypto now. And what does it all mean for crypto?
Yeah.
I have a theory because of the low ISM purchasing index.
The ISM, yes, because that reflects the economy. Hey, Toby. And the thing is that, what I was saying earlier is that with people, we have to have a good economy, so people have jobs, so they have income, so they can buy the coins. And also, what we want to say is like crypto is very tightly correlated with the real economy as opposed to money supply or the dynamics that go on a lot at the Fed, because who buys these coins? I mean, it traditionally had not been institutions. Like most of the buying that we saw in 2025 was institutions. Most of Ethereum was bought by Tom Lee. Exactly. I mean, Tom Lee is the only person that's dumb enough to buy Ethereum because of how.
What do you mean dumb? What do you mean dumb? Come on now.
He wants
look
to
at the
be the
Ethereum
second Michael
Foundation.
Saylor.
Do they look like fiduciaries? Do they look like that they care at all about the people that invest in Ethereum with the way that they act? I mean, you saw that time where they set people up so they could dump on their heads. They posted out a tweet that said believe in something, and they had the ETH capitalized in it, which got people thinking, oh, Ethereum's going to be doing good. Let's go buy some Ethereum. And it turned out the Ethereum Foundation was just dumping on their heads.
Hold on a second. How does this differ from something like OPEC, right? How does it really differ? I don't trust those guys either. So, and yet oil makes the whole economy go round and round, and our decisions to either wean ourselves from it or invest in it or top up our reserves or sell it on the open market or confiscate it from open waters. It is run by all sorts of different schemers with probably worse ethics than anybody on Vitalik's crew. Question is, why is it any different than OPEC?
The Ethereum Foundation?
Yeah.
I don't think it is that much different from OPEC.
Okay, then.
They're not fiduciaries,
nice.
They're douchiaries.
You got my attention.
Yeah.
When we look at a lot of the other projects out there, they really want good price charts. All right. They understand that it does not help them if they have bad price charts. Like even us here in Pulsechain, Richard understands the price charts are not helping us. And when we look at something like, say, Solana, they understand, hey, we got to have good price performance to even get attention, to even get people to use our products. Same with Sui and Sonic. So Sonic also realized that, because before they were Sonic, they were Phantom. And after like the big multi-chain meltdown that they had from the multi-chain exploit, they thought to themselves, man, we can't make something happen with a wreck chart like we got here on the Phantom chart. So let's rebrand into Sonic. So we start with a clean chart. Same goes with Matic. They did the same thing by rebranding to POL, because they understood, well, if we look at the chart, it does not look appealing. Let's rebrand into POL. So we start with a clean chart. So I think many of these leaders behind the projects understand.
Poly
They
is
understand
gone.
what people look at and what they care about. But Ethereum doesn't care.
But why Pulsechain though? What do you see here, since you're observing the whole market? What do you see here that is different to these other DeFi chains? Or
what gives you faith?
The big
Yes.
ones. What gives you faith and hope?
Well, for one,
for
our
a good
founder doesn't
2026
dump on our heads.
Yes,
Yeah.
that's one.
That's a big one.
That's a very big
He's
one.
the only founder that buys back.
Yeah.
Who else does that? That's crazy.
Two for two.
Allegedly.
Well, I'm not a big fan of buybacks either, though, because like for some of the coins that have done buybacks, it's not helped them any. Like Sonic did buybacks; they're now lower than they were before they started buying back. Same with Hyperliquid, same with Aster, same with Athena, same with EtherFi, same with Pump.Fun. I could go on forever about this.
BNB
So, like,
it
coin
works
burns-
though with CZ.
Well,
and
BNB
Binance.
works because they appreciate, their price appreciates at the expense of the rest of the market. Because what's happening is they're taking fees from every coin that is swapped on Binance centralized exchange and then selling those coins to buy more of BNB. So it is actually extracting from other coins in the market to beef up BNB.
Ah, okay.
But my problem with buybacks is that it just attracts the wrong type of people, particularly right now. Because right now, everybody is looking for a quick buck. Everybody's looking for easy money because we're all tired of this bear market. We're tired of being abused.
No, I'm not tired yet. I want more. Come on,
Well,
bring it.
All right, unless you're a masochist like Pop.
You're
here.
exhausted.
If you're a masochist and you enjoy like
I'm
getting
tired, boss.
dominated and beaten and everything,
Very, very
getting
sad,
whipped and
because it's
paddled.
very true.
Like we're at a BDSM club here. Okay, well some people are into
That's
that.
an
No
advice.
But everybody else, we're all tired of the abuse, and we're looking for quick bucks anywhere that we can. So when a project announces that they're going to do a coin buyback, the wrong people pile into that project, wait till the buyback is done, and then they sell it right down. That happened with Pump.Fun. That happened with Hyperliquid and
Even with
Sonic, and it's
Pulsechain.
happened every time in Pulsechain.
That's
So
the fear
I'm not a
many
big
people
fan of
have
that.
with Proof X.
Yeah.
You
The
know?
question is, Cairo, or was, what gives you faith and confidence in this thing of ours? I want
Okay.
give me some
Yes,
sunlight
here's the
and
hopium. The
daffodils.
hopium. And it'll also
hopium-
answer Peter's
hopium
question about
dealers.
alt season as well. Is
Yes.
if we understand what legitimately causes crypto to go up, because I wrote the book about the subject. And as a matter of fact, every one of you guys out there in the chat, send in your super chats now, and I'll send a free copy of the book to whoever sends the highest one.
Oh,
Whoa.
that's right. Because
That's what a little good giveaway I do here every time I'm on somebody else's stream.
Because
is I
our-
give
Careful, on
away-
this stream we'll get 25 cents. And
we
that'll be
just
the
had to
highest.
renew our restream license here, so that shit costs money. Send in the super chat.
Well, send it in, yep. And
This is our pledge
here's
drive.
here's what we want to get into is like, what is it that actually causes crypto to go up? A lot of people thought it was just the halving. No. You see, most coins don't have a halving. So even if it explained Bitcoin, it didn't explain anything else. And also, as time goes on and we get deeper into Bitcoin's life, the halving matters less and less because the block rewards get smaller and smaller and the impact is so much less, especially when there's only about 2 million coins left to be mined. So clearly it's not the halving. And I'll tell you exactly what it is here is that crypto, any type of crypto at all, doesn't really even matter what it is. It could be the silliest meme coin, or it could be the most serious project ever. It is a hedge against reckless fiscal and monetary policy, because what causes it to go up is when fiscal policy from the federal government and monetary policy from the Federal Reserve get reckless. That's what happened in 2013. That's what happened in 2017. That's what definitely happened in 2020 and 2021. That's what has not yet happened in 2025. You see, what you can really kind of hang your hat on is that the national debt is not going to get paid off. It's only going to grow. All right, it has to. We can talk about why later. Governments use the national debt or adding to it with bonds to give away goodies to voters to get reelected, and they rely on the Federal Reserve to bail them out of their crazy spending. And when the Federal Reserve bails them out, what it does is it can use two tools in particular. One is it can reduce interest rates so that it's less risky for lenders to create credit, and credit creation goes into credit creation helps the price of all assets, crypto in particular. Or it can print money. We call that quantitative easing. I've done this demonstration a million times here, but imagine it like this here. It's not a literal money printer at the Fed. It's a little more technical, but imagine that they are printing dollar bills. Here's what happens. This dollar bill gets fresh off the presses at the Fed and goes into a bank, like a commercial lending bank. That commercial lending bank lends this out to a business. What does the business do? Well, they got a lot of expenses they got to pay, so they'll pay expenses, but they also pay employees. This goes into an employee's pocket.
Wait a minute. Aren't they shocked that it's only $1?
Well, we're talking about China here, so it's sweatshop labor.
Okay.
Or imagine like this is a $100 bill and you got a $100 an hour wage, all right? And you actually get paid in cash, which doesn't happen, but pretend it does. So employees got the money now. What's the employee do? Well, they got to go buy groceries. So now the money is in the cash register at the grocery store. What's the grocery store do? They got to pay expenses. They got to buy things like supply chain stuff. It's in the supply chain person's hands. And it can change hands several thousand times before it finally ends up in the hands of somebody who has more than enough of these already to cover their expenses, so they don't need to spend it. They save it. See, this is how money always ends up in the hands of the rich, no matter what we do. It ends up in the hands of somebody who wants to save it, and they save it. They can save it by putting it directly into a financial asset, or they can put it in the bank, and the bank will put it into a financial asset. Typically, what banks choose is T-bills. And when that happens, it doesn't matter what they invested in. They are crowding out and sucking up the return that investment is capable of getting. So there's not enough return left in it for other investors. They have to go further out on the risk spectrum to get the returns that they were used to getting. And sometimes they have to, because maybe it's a pension fund that has a charter that says you must get X return, or it's a mutual fund that has a charter that says you must get X return, or you must invest in these things and that things. So as the saver buys an investment and forces other investors to invest in our things, it pushes them further down the risk curve. What's all the way at the end of the risk curve? What's the riskiest investment in the world? Crypto.
Hex.
And because we're so small, we are still an incredibly small market, man. We're only, what, $3 trillion or $3.4 trillion, depending on which coin ranking site you use. Because we are so small compared to other investment markets and compared to the amount of money that is out there to invest with, it doesn't take very much to get us rocketing off and doing those life-changing exponential returns. And it's not just a matter of market cap. I mean, it's not a matter of for every dollar that goes to buy a crypto coin, the market cap of the crypto asset and the market itself goes up $1. That's a linear return. That's not crypto, because it's not based on market caps. It's based on how many of those coins are available to buy at that given moment, which is what we call liquidity, how much liquidity is there in that system, which can lead to exponential returns when the liquidity is very low. And what ecosystem out there do we know for a fact has the lowest liquidity that we can think of, besides like, some real trashy scam project meme coin or whatever? What's a legitimate ecosystem out there with a founder that really cares about his ecosystem that has incredibly low liquidity, probably more so than anybody else?
RH cores.
That's right, RH cores, because majority of the hex is staked, so there's a lot less hex available to buy. And when we look at the liquidity on the other cores as well, particularly the Ink token and PulseX, very little of it available to buy. They took a lot of that liquidity away, and they eliminated a lot of the ways you can earn yield on it and everything. Because, one, they didn't want people just extracting yield and selling down the liquidity of the chain. But then two, it's also because if we have the lowest liquidity of any asset out there, we will move the hardest and pump the most when the new money comes in. So the new money is not in.
But wait, hold a second. Hold the cotton picking second. It's great to pump the most, but will require a very thick liquidity pool for people to actually be able to translate those paper gains into real, gains in fiat sense, right?
That's right. See, it sucks right now to be getting in and getting out, but as more money comes in and liquidity pool grows, well, then it's easier to get in and out. But right now, it's at its lowest. I mean,
but it's meant to be low in many different reasons, right? One is liquidity was removed, and two, incentive to put new liquidity was also removed. So it seems like it's a very clear message that the powers that be, the African priest or whoever's pulling the levers, wants that liquidity pool to be the lowest possible, right? I mean, it's not the time for us to have thick liquidity.
Yeah. They wanted that low. I mean, like when we talk about how low it is here and everything, I mean, when it comes to
your
hex, when it comes to like hex itself, the liquidity is pretty. Actually, I don't have it on hex, but I do have it on Pulse. Hex liquidity is just 273 billion.
Sorry, Cairo, you're breaking up now. You clicked something on the computer, and then the sound
hang on.
Went boop.
Plausible deniability for a really negative answer.
Stop selling! Stop clicking the button. The red
button. Now,
he's busy selling while he's talking to him.
Yes.
Yes.
It's better.
All right, great. Yeah, so the liquidity is very low right now, and that would be like very painful to get out of this ecosystem. Not getting out exactly what you put in, which if we want to reduce sell pressure, great. And then if we want to reward the people who are already here the most, also great. Because now every new dollar bill that comes in, it pushes the price up a lot higher just because of the lower supply that's available to buy. And the liquidity pool gets bigger and bigger with each new person that comes in. And it's going to be like another self-fulfilling prophecy, just like that S&P 500 index fund, where a new person comes in. It creates a great big candle when they enter. The great big candle gets other people interested and attracts other people, because they say green candles are the best marketing. So it just keeps self-reinforcing like the Mag 7 does. Now, you're probably wondering, though, then, well, why hasn't that happened yet? And the reason why is because like this thing I was showing you of like new money being printed, that hasn't happened yet. And even like the money printing that they talked about doing yesterday at the Fed presser, it's not that much that's coming in just yet compared to like what they've previously done. And when you think about like what the function of that money is and what it's meant to achieve, it's not necessarily going to be something that totally helps financial assets that much right now either. But what we can take from it, though, is that it's the prelude to them printing a lot more money. I mean, how long was it from when they announced, hey, we're going to stop QT, to them saying, oh, hey, we're going to expand the balance sheet now and start printing money? Wasn't that long. Exactly, 2 weeks. I mean, if we look at when they officially stopped quantitative tightening, it wasn't even on December 1st. It was on December 3rd. And then the 12th, coming up tomorrow, is when they're supposed to start buying treasury bills and start expanding the balance sheet, the not QE that they're going to do. And what really stood out to me is the excuse they gave for why they're doing it. Because did anybody like to stand out to anyone at the press conference yesterday? I learned something at the press conference that I never knew in all my years being in finance that apparently when we pay taxes, that causes stress on the banking system. Does that sound like that makes any sense at all?
No.
No. And that's what Jerome Powell said at the presser yesterday, that they have to start buying a bunch of T-bills and put liquidity into the system because of tax day coming up on April 15th.
Wow. I thought that was, I wanted to ask you about that.
Yeah.
Does that really, so when the IRS cuts checks, that causes, they need liquidity because those checks have to come out of a pool that Powell is concerned about, and they could have a liquidity shock that results from paying us our own money back, a portion of it back.
Well, the way he's thinking is that he's thinking people have to pay taxes, and they pay taxes by writing a check and sending it to the IRS, and that check takes money out of the banking system and puts that money into the Treasury's general account at the Fed. So it's sucking money and liquidity out of the economy. And my thought was, well, wait a minute. We just passed the big, beautiful bill that gives a whole bunch of tax breaks. Scott Bessent is out there saying that, hey, the biggest tax returns in history are coming to people when they file in 26. And like the biggest tax bill that I ever paid in my life was last year. I already got a head start on my taxes for 25, and I'm looking at a refund this time. So I can't be the only one in this boat here of thinking, well, wait a minute, like, especially in a slow economy year where people didn't really make this much money, why on earth would we think that they're going to collect more in taxes in 2025 than they did in previous years? And also, why on earth do you need to start putting money into the banking system this time when we've been paying taxes every year for 250 years here in the United States of America, and it's just now a problem for the banking system? Makes no sense.
But we haven't been paying taxes for 250 years.
True. Okay, so we'll give it 90 years because, like, the income tax has been around since like 1913 or so.
There you go.
So
there you go.
We'll say like 90.
So it's a decoy story, basically.
An excuse.
So,
right?
so
'Cause
they're
notice,
hiding
like,
something in the back.
Yeah, I mean, you ever heard a good question asked at any of these pressers?
No.
You ever heard like a very confrontational question asked at any of these pressers?
Well, they tried, but he's also quick to shut it down when something is a bit like provoking or thought-provoking, let's say.
A couple of
quick
reasons
to shut it down.
Yeah, a couple of reasons for that. Like when you're in the press corps, it's a very prestigious position for you. I mean, just the fact that you get that close to power and get to ask a question, that's incredible. That's probably well paid and everything. So for them to put Powell into a difficult position, you might not be invited next time around. Another thing is nobody wants to be responsible for asking a question that makes Powell say something very hawkish and crashes the market.
That shakes the market.
Yeah, that sucks. Yeah.
So he gets up there and he says this incredibly stupid thing that we have to reinforce the banking system because people pay taxes. Nobody in the press corps says, oh, excuse me? That's why.
But isn't buying T-bills good?
Buying T-bills is good. It's just
I'll take it. That's the way I looked at it. I'm just like, you know what? This makes no sense to me either. But I'm like, wait a minute. I'm like, this is good. Do people understand that this is good? So, yeah.
It is good. Yep. It's just the reason he's given is not a legitimate reason. And it makes
a little
us think,
spurious.
Yeah, it makes us think, well, is he hiding something? Is he covering something up? And then another thing that stood out to me.
To me, it seemed to me like he was trying to explain it. Like, this, like, I need to make this make sense because then people are going to think that I'm turning on the money printer, and that's in some way supportive of the Trump administration and everything that I've kind of obviously been against for, as long as he's been in. So I have to justify why we're kind of sort of starting to crank the printer. And well, the banks are going to need it because of all those refund checks they're going to have to cash.
Not just
that's that was my initial instinct. I don't know.
Yeah, it's not just because he doesn't like Trump. That's one reason probably. But also here's another thing is that when it comes to turning on the money printer, the way that that's interpreted by markets is that there's a disaster they're trying to prevent because they operate by what's called the Bernanke doctrine. Because when Ben Bernanke was the chairman of the Fed back in like the 2007, 2008 era. He had this doctrine that said, well, we'll do the quantitative easing after we've brought interest rates all the way down to the zero lower bound, which meant if you're doing that, you're in the middle of a great disaster, a horrific recession like 2008, and doing it prematurely or announcing that you're going to do it will scare markets. It's just like when you look at the history of the federal funds rate, just about every time that they did a major cut, we were already in a recession or we were already in a market downturn. They were too late. That's another reason why that he doesn't want to say, well, we're turning on the money printer like that. He doesn't want to say we're doing quantitative easing like that. I mean, even Kevin Hassett, who's supposed to be Trump's yes man, was asked about this. And he said, no, I'm not going to do no money printer. I'm not going to do no quantitative easing. And I'm not going to, drastically lower interest rates. I don't think that's how he actually feels. I think he's saying that because he has to say that so he don't spook the markets or anything. Another thing, though, that stood out to me about Powell's presser is he kept referring to, well, there's a conflict between the two mandates, and that's not usual. He kept saying, rarely have we been in a situation where unemployment has the risk to the upside and inflation is also a risk as well, and we have to juggle between the two risks. He says that doesn't happen normally. And I'm thinking, where you been, Jay? That was the case in 2008. That was the case in 2000, in 1994, and 1987. Many disasters were preceded by what we're seeing right now, which is you can call stagflation. Inflation is going up where it's high, while the job market is weak. This is pretty typical just before a major disaster. So he's trying to say it's not typical because he doesn't want people to think that there's a major disaster just around the corner. And then he's also given a stupid excuse that makes zero sense about people have to pay taxes, so we got to save the banking system, as to why he's turning on the money printer. So there's a lot more going on behind the scenes.
Going on behind the scenes. So you're saying we need to get that environment, like the money printers have to go brah, but seriously, and the market also has to feel it, as in, government-funded infrastructure projects, military funding, whatever they spend the money on, refurbish the airports so that people are in jobs again, and then we might see an impact to the crypto market. And you think that's on the way next year or the next 2 years?
Yeah, back to this illustration here. When they print off new money, it needs a place to go. Where does it go? The final destination of every dollar printed is a financial asset.
Yeah.
Because where does this money end up? Even if you gave it to the poorest people among us, what they're going to do is they're going to go buy stuff from businesses. Who owns all the businesses? The rich. And what do the rich do? They don't need to spend money like everybody else does. They got their expenses covered. So they got excess money. They save it. When they save it, it goes into financial assets. Now, what we need to have happen is we need to have new money printed and added to the economy so it circulates around and it gets distributed to many people, and eventually it ends up in the hands of people who want to save it. And the way they want to save it, either they put it in the bank and the bank invests it, or they just invest it themselves. 2026, we're going to see a lot more of that, and I will show you exactly why. Maybe I can share my screen here for you guys.
Share screen?
Yeah, here we go. Let me know if you can see this.
Yep.
All right. So when it comes to the world economy, do you know what like 80% of all the transactions in the entire world economy is? It's all kind of the same thing. It's the same transaction. Anyone want to guess what it is?
Cocaine.
No, it's
probably just restructuring debt, refinancing would be my guess.
That's right, refinancing debt. Because remember, majority of like the debt out there is held by governments. Governments don't pay down their debt ever. All right? I mean, in the United States, we had paid it down a couple of times. I don't think you'll ever see the national debt paid down ever again. Last time that we got close to it was like when Clinton was president. We had a surplus. But you see, we can't do that anymore. We can't pay down the national debt because if we do, we don't have a treasury market.
And if we don't have a treasury market, well, then we don't have this risk-free bond asset that anybody can buy and we can use to offset risks that we're taking in other markets like stocks. You see, if I'm a mutual fund manager and I buy a very risky stock, I can offset the risk and lower the risk profile of my fund by also buying an equal amount of treasuries, because treasuries are considered risk-free. So this national debt is going to go on forever. It's going to grow. And the majority of the transactions that are occurring in world economies is refinancing of that debt. And the largest of all the debt comes from the governments, not just the United States, but governments all around the world. And this chart here comes from Cross-Border Capital, who's done like some phenomenal work on how all this works here. Now, here's what we want to understand about this is, see, I got another slide here to show you. How do I do
Nice comment, Alan. Well done.
And thank you for the super chat.
Yes,
One
thank
banana.
You. Thank you for the $5 Vietnamese.
There might be somebody getting a free book there.
Oh, we
Toby
lost
gave a
your-
fake super chat. That's always nice as well.
We
That
lost
wasn't
your
fake.
share.
That was legit. I was just getting. I was just priming the pump. You know.
Thank
Yeah,
you
you
for the $2. By the way, you guys, we have 100 people watching live right now. It's not that glorious because Saint Wolf and a couple of others are streaming over us. So we have to think replay gang. So we get the views on the replay. But everybody, please follow up, smash the likes. Also follow at Reinvent-Ideal. Links to his YouTube are down in the description. Here is your screen again.
Yes, check this out here. So because the majority of the transactions in the economy is refinancing debt, what we got to understand is there has to be a balance between, let's just pretend that this piece of paper here is a bond or a debt, and then here's money to either pay it with or refinance it with. There has to be a balance between the two. We cannot have way too much debt than liquid money available to refinance the debt with. Because when we do that, as you'll see on this chart, that has happened a couple of times. When that happens, we have a financial crisis because there's just not enough money to cover the debt and all of the bonds that are being rolled over, refinanced, and reinvested. When we have more money than debt, what we get then is asset bubbles, which kind of in one right now, not quite though. Because as you can kind of see from the chart, this also by Cross-Border Capital, which has done phenomenal work on this, the ratio between debt and money is not quite even. Not quite even. We need more money to be printed off to cover all of the debt that is going to be needing to be refinanced, rolled over and refinanced, which I have another chart here to show you to that effect because somebody posted this on Twitter. Where did I see it? No, not that one. Is it this one? Yeah, it's this one here. So hopefully you can see this here. You see this chart? It's got all the blue on it.
Yep.
All right. So this shows the year 2026, next year. That is how much debt in the United States, U.S. government debt, that is coming to the end of its term next year and has to be refinanced. And that is a total of about 9 trillion. So about 30% of all the debts that we have. And that's just what has to get refinanced. That's also not factoring in how much new debt is going to be issued that year. There will be new debt issued that year. It absolutely will be because they always overspend in Washington. And because the amount of money that it needs to be available to refinance this debt is not large enough to match this debt, the Fed will be forced to print. Because you're probably wondering, like, why at the Fed are they lowering interest rates and turning the money printer back on when, clearly that's going to help Trump and Powell doesn't like Trump and all of these other people at the Fed, they want to look all independent and want to act like, oh, we don't do what the president tells us to do. No. My name's Lisa Cook and I'm going to do whatever I want. Reason why is because of this situation here. Because you have no choice. If you don't print more money to make this debt available to get refinanced, to make the refinance smooth, you will cause a financial crisis like 2008, like 2020, like 1999, 1994, 1987, because that was the catalyst behind all of those crises, right? The bond market is always the culprit behind every single one of these financial disasters that we experience.
Yeah, they're playing chicken with the wrong guy. That's has been kind of my take on it for a while now, is that, the road is only so long. They both know how long the road is, and Trump knows the game. So it's like, Jerome's trying to look like the tough guy, trying to hold the line, and Trump's just smiling and stomping on the gas. So
he has a new pick for the CFTC chair, which broke last week. I think that news. What do you think about this person? Is that a good pick in your opinion?
Yeah, because whoever he's picking is most likely going to want to deregulate and have a more laissez-faire approach. Won't affect us too much in crypto. I mean, we'll have a greater idea of how much this affects us in crypto when the Clarity Act comes out,
right?
Or when the market structure bill comes out, which should be somewhere around the turn of the year. But for the most part, the people that he's appointing are people that are going to help him run the economy hot. He wants to run the economy hot because he doesn't want to be a lame duck for his last 2 years of his presidency.
The legacy,
Exactly. I mean, if he loses the midterms, which it looks like he will be a lame duck. And he doesn't want to do that. He wants to make sure big tax returns are going out to people next year so they have money to feel like they can afford life again. They can afford to be alive. He wants to run the stock market hot, have that keep going up so you get the wealth effect, and definitely wants the crypto market hot because the majority of his family's wealth is actually in crypto now.
Yeah.
Yep.
Yeah, they say out of spite though, because I watched an interview. This is what I told you, Papa B, the other week when we were in the green room. I watched the interview with the wife of one of his sons, and they said their companies got debanked so many times, and because of legal repercussions and whatever. And everybody knows they went through some quite a lot of drama there, and then they figured out that, hey, crypto is in fact an alternative where the big Wells Fargo, as we call them, or the JP Morgan just cannot just as easily cancel your bank account. So they discovered crypto. It's funny that rich people's problems like that, but yeah, it's the truth. So they are big time invested in cryptocurrencies. Yeah.
That's right. He was against crypto originally, but then after the debanking incident, he immediately got pro crypto.
Yeah.
Yep.
So one of us. But hey,
exactly, one of us.
Where we going here now, Toby? Do we have some charts? I think we pretty much that answers your. Please explain to me the bond markets like I'm a 4-year-old question. Does it, or do you have another one, Toby? Since we have Cairo on the show,
that was my primary question. I was kind of half joking. I got a general idea of kind of how all that works, but as I will do, I like to be the example of the everyman, and I think the everyman out there mostly doesn't understand how the bond market affects the greater economy, what that is in kind of the big scales of how money flows go and how liquidity, which is that's one of the things I've really appreciated about you, just pounding away out there with your videos and your posts about, liquidity being the driver. It's not the 4-year cycle. I've famously said over and over again, it's not different this time. And technically I'm right. It's not different this time. It's that doesn't mean it's 4-year calendar year. It's that the same factors are going to make the same outcomes. And, and seeing the way that you've so eloquently described that to people has been refreshing, to say the least. So I thought, hey man, we got to get Cairo on because this guy, has a really good insight on this. And being a guy that likes to talk a lot, I appreciate other people that like to talk a lot. And Cairo, my friend, between me and you and Papa, I'm surprised this thing isn't already 4 hours long. So just if you had a TLDR, for the everyman, what the bond market is, what would that be?
Okay, great. I'm sharing a screen here if y'all can see this.
Okay, hold on.
Particularly the treasury market, all right? Because this is if you're going to know anything about any bonds at all, you should know about treasury bonds. All right, so this shows you how the national debt is funded by the government. They do not wait until tax day to start spending money. What the government does is they sell a bond and raise money, basically borrowing money from the private investment markets. And you buy a piece of the national debt when you buy a treasury, all right? And they use that to raise money, and then when they collect money at tax time, they use the money they collect at tax time to pay the interest on these bonds. So if we didn't know that that's how it worked, that's how it works. And there's different kinds of treasuries out there. The majority of the ones that are in the form of bonds, though, is about 30 trillion of them. 6 trillion are T-bills, which are in the news now. The main thing to learn about this here is that bonds tell you what is financial gravity in the financial markets. What is the force of gravity in the financial markets? When these bond yields are high, that tells you that gravity is very strong and it's very hard for investments to take off. When the bond yields are low, that tells you gravity is very weak and it's easy for these investments to take off.
Mm-hmm.
Why is that? Well, it's because when bond yields are high, a big part of what causes them to go high is the belief that they're too risky to buy, particularly with long-term treasuries. The 10-year treasury in particular is the one that analysts care about the most, because when you look at the yield on a 10-year treasury, what it tells you is growth and inflation outlook. So when it's high, people are assuming, well, there's a lot of inflation that is going to happen in the next 10 years, or there could be a lot of growth that could happen in the next 10 years. But the reason it's the force of gravity is, would you take risk in being like a real estate landlord, buying a apartment building and going through all the hassle of maintaining that building, marketing the rooms, collecting the rent, dealing with the hassle of tenants and everything? Would you go through all of that just to get a 6% return, because that's what the cap rates are, if you could get 4 or 5% on a 10-year treasury without any hassle at all? No, you wouldn't. I'll answer it for you. Of course you wouldn't. So when these rates are high, when the yields are high, it's going to be a force of gravity pushing down the value of other investments, just because treasury is figuratively risk-free. We don't think the federal government is going to go into default or not be able to pay its bills, but it's risk-free in the sense that the money will come in to pay you the interest that it owes you, and it's not going to require any effort from you, any hassle from you. You're not going to be worried about, China did this, so now the stock market's doing that, or the Ethereum Foundation did this, and so now Ethereum is doing this. We don't got to worry about any of those things with treasuries. So when treasuries have high yields, it makes other investments unattractive. But when treasuries have low yields, well, then it makes other investments more attractive, because the risk-free yield, the money that you can make without taking any risk, is not that much. So in order for you to start making money, you have to go where you can take risk. So that's why we want interest rates low. That's why Trump wants interest rates low. That's also why we want quantitative easing. What they're doing right now is not quantitative easing by its definition. Because you see, for it to be quantitative easing, they have to buy bonds that are long-dated bonds, like 10-year treasuries, 20-year treasuries. That's what they did in 2020. The reason they did that is because the majority of the risk is in those long-term bonds. When you buy up those bonds and take them out of the market and put them on the Fed's balance sheet, you're taking risks out of the market, and you're telling people, hey, there's less risk in the market. Go invest in it. And people did. That's why people came to crypto, because them buying all of those long-term bonds not only took risk out of the market, but also pushed the yields down. So you yourself couldn't invest in a 10-year treasury and make a good return. It was only paying 2%. And you wanted a much better return than that. I mean, I would want a much better return than that. I want like 10, 15, 20%. So he had to go to more risky markets like stocks, or I mean, even if you're a bond investor, you can go to corporate bonds, or if you want the best returns that you possibly can get, you go to crypto. And that's what does the trick there. So,
but it's true. If you think about it, that was me back in those years. It was like, what? I can get 38% APY here in Hexaco, and my bank is giving me 1% if I'm lucking in a high interest savings account. Whereas right now, as Peter hints, it's totally the opposite. The Hex yield is 1.5%, and I can get 5 or 6%. With a bank if I'm looking hard enough, So that's the landscape that I guess needs to change again.
Toby,
I got a question. I'm curious of Cairo's take on this. It's like I've said for a long time, and just intuitively, I was looking at the yield of Hex as well as even the farms being levers that are the OA could pull, very similar to quantitative tightening and easing, which effectively are tied to bond rates. So just, what are your thoughts on that? Because it seems to me like, okay, at certain points, he's going to want inflation higher. At other points, he wants inflation low to encourage people to invest, right? Lower liquidity. Inflation's lower, so there's not as much liquid out there to dump. All these things to me seem to tie together to be kind of laying the groundwork. And then on the flip side of it, because, Papa has talked about this, and I have too, about like, okay, great, low liquidity is awesome. Prices pump easier. But then at some point, if there's people that are wanting to take profits and the liquidity is still thin, that's not ideal. But I tried to explain that's tempered a bit because liquidity is a function of what's in the pools. And if you have tons of people coming in and buying and driving the prices up, you're going to have, let's just say Pulsechain, for example, you're going to have less Pulsechain available to buy in those pools and more USDC or more stables. So effectively, the liquidity is going to thicken just inherently as the prices go up. But if you want it even thicker still, you want to incentivize people to not get out, to not cash out. So you would need something attractive, just like an attractive bond rate, right? To keep people invested. So that's where my theory is that as we climb and as we get near the top of, this cycle or this, whatever you want to call it, that would be the ideal time, the most opportune time for potential emergency end stakes or for stakes that are coming due that the OA has to not restake, so that yield on Hex stakes can go back up, which makes that a more attractive option for people to stay in the system as opposed to getting out of the system. Just curious of your thoughts on those thoughts of mine.
And thank you for the super chat, Alan Fisme. Thank you.
When the market's hot and the ecosystem's hot, that's a great time to do it because you make it stay hot longer. Right now is a terrible time to do that. Correct. Terrible time to have good yields in the PulseX farms, and then also good yields in Hex staking rewards, because we've seen what some people do with those is they use it for pure extraction plays to extract liquidity off the chain.
Yep.
Yeah, you get some true believers every now and then. Like when PulseX first came out, what I was doing was I was earning Ink token and immediately selling it for PulseX and Pulsechain, the new coins, because I was like, oh, we got to get as many of these things as we can here. Looking back on it now, of course, that was stupid because I could have made the $80 top there in Ink. I missed out on that. But yeah, when the ecosystem is hot and you want it to stay hot so you don't look like a one-hit wonder, absolutely, you want to have those rewards doing very well. And that's typically how it happens. Like I remember back last alt season, where it was before it was winding down, 2022, to me, like the chain to be on for DeFi was Phantom. And the yields that you could make on all the different dexes in Phantom, like Spooky Swap, those were incredible yields. We're looking at like 50% yields in all of the different coins, all the different LP farms and everything.
Talking Spooky Swap now, man. That's deep in the trenches.
And it takes you back.
The Wayback Machine.
Those were the good old days. And but it all came to an abrupt end, right? When the alt season ended with the announcement of quantitative tightening, because we started going down before they started quantitative tightening, just because they announced it, and we are just so sensitive to that kind of monetary policy. And the yields dried up as well. So it's one of those things that, like, you can be kind of torn on it, because I don't think you ever make as much money with yields as you do from price appreciation.
Right.
But then it's also one of those things where if you want to keep the price appreciation going, you need to offer high yields.
Yep. Yeah, that's the balancing act that I see RH trying to perform as we go into the bull cycle. Because it's not only that, as far as incentivizing people to stay in the system by providing some good yield, whether it's in the farms or in staking, but also you want to be able to counteract the inherent sell pressure that will ramp back up because if people can make good yield in the farms again, rinse and repeat, there's going to be a certain segment of those people that as soon as they can get those good yields again, they're going to turn around and dump them to extract. So you're going to have to simultaneously thicken liquidity externally, not just from price appreciation that will happen organically, I believe, and maybe some little infusions of capital here and there to keep the green candles and the FOMO going. But at some point, it seems to me like if he really wants to have a nice rounded top and not just like a drop off, that there's going to have to be some external income, whether that's the OA funds coming back in, whether that's other investors he knows, that other people know that are on the outside that understand how important it is for us to not have just a peak and a dump. It'll be interesting to see. I'm here for it either way, so it'll be fun.
I'm RH. I'm not doing anything of like a giveaway. I'm not doing any coin buybacks. Right. I'm not doing any coin burns. I'm not doing any rewards for yield farming.
Yeah, free stuff is over.
Doing anything that's going to encourage extractors to come into the ecosystem and extract that value out of the ecosystem, particularly right now when all these practically vultures just hovering over, looking for wherever they can scrape things right off the bones. That's kind of the environment that we're in right now, and that's why it's kind of sucking all across the board for DeFi. So if I'm RH, I'm not doing any of that stuff right now. But when the money printers turn back on, when the ISM is above 50, when people are having people have money to buy coins with, and they're looking for places to store their extra money, then that's when I'm going to do something like that to attract attention and attract people to the chain. But right now, I would not do it.
Makes sense.
Correct.
Makes sense.
Cool.
All right, you guys, we have to come to some kind of a closure here. We're already way over the
GA
hour
with
mark.
Do you want to speed? I can do a speed round.
Can you do a quickie like?
No.
Like
I want to see the chart.
My own co-host. Does anyone out there?
Hours.
Okay, chat. Hey, fill the chat with sevens if you want to see the T8.
Sevens in the chat.
Sevens in the chat if you want to see the T8.
Here's one already.
On.
So
Make sure they know TA and not
TNA.
TNA.
Yeah, TNA, exactly.
Let's break into it.
So let's do a quick one.
Let me share my window. That would be helpful. Sorry about
share
that.
the screen.
Hey, first of all, before we get into it real quick, Cairo, thank you so much for coming on, dude. Keep up the great work. I love your stuff in spaces. I am a fan of bloviation. I enjoy it. Papa loves it. And I tell you what, if there's any way that guys like us could figure out a way to condense this knowledge into like more bite-sized chunks for people, I think that could be useful. But then again, maybe it's one of those things. It's a barrier to entry, right? It's a barrier to entry. So it's like, hey, if people don't want to sit around for the long-term stuff, if they don't want to listen to my long rants and Papa's and yours and even DJ's, Peter, not so much, then hey, maybe they don't deserve the alpha. Maybe they don't deserve it, right? So there's that counterpoint. But anyhow, so moving along here.
Yes,
BTC,
we got a bunch of sevens in the chat. Let's go.
Sevens in the chat, baby. Yeah, let's go.
Nice.
All right. So and I think I am putting up on Polymarket if this is the year that 7 actually kills me with the Glock, like he threatened me a couple of times. So look on Polymarket. There's going to be a betting spread for that to see if this is the year he actually tracks me down and murders me. Okay, on a brighter note. BTC. So this is the big white ascending channel that's been going on since way back when. Trust me, it goes all the way back to 2012 as it kind of trails off here. Here you can see the double top in 21. As we go along here, you can see where we ran up to it right after the election, rejected right there, pulled back down right after the inauguration, ran up again as we predicted. And then we had the typical pullback you see, which is around 37%. I'm not going to draw that in the sake of time, but trust me, that was around 37, 38% drawdown. And where did it bring us? It brought us right to this dashed yellow line, which is the middle of the midline of this giant white channel. Eventually, we did get above this. This is on the weekly, okay, just to kind of keep it tight. On the weekly here, we did finally pop above in July of 25, and we stayed there 1, 2, 3, 4, 5, 6 weeks. 6 weeks above. We had never, ever, ever closed even a daily above this. I believe maybe back here in April of 21, we might have closed a daily above it, but we never even closed. We definitely never closed a weekly, obviously. So nice, big, what ended up basically being a bear or a bull trap rather, pulled that back down below, right along, followed that 10 EMA. I'm sorry, the 21 simple moving average, and then we had the big dump down recently with the FUD and stuff that was happening in October. And interestingly enough, we just compounded that with the announcement of the ProveX at the end of October. So we were already in a pretty steep downtrend. And then, Bitcoin continued down, back here about a month and a half ago, back in before Thanksgiving, we were talking about, how low could it go? And we we figured out that, 88,000 was going to be probably the support level, but it could wick much lower. I was saying it could go as low as 78,000. We stopped at around 80. So we got a nice wick back up here. And then as I like parallel channels. So it's like, I'm looking for structure here, like what makes sense. So I went all the way back here to the lows of October 23 and found where we had support, wicked down to it in August of 25 and 24 and September of 24. And then we had all these tops that I've already talked to you about. So yeah, this is a channel that I have a lot of confidence in. Plus it's a longer time frame, weekly. And we have wicked through it and back and sustained above it for 1, 2, 3, 4 weeks now. So this is looking like a really good recovery for Bitcoin. Are we going to just, V-shaped recovery and go right back up to the top of this channel, break through the top of the white channel again? I don't know. Crazy things happen. I do have a feeling that maybe something could still happen in December. The broader markets, liquidity, all the things that Cairo was kind enough to share with us today kind of point to maybe the recovery not happening that quickly. But Bitcoin does wild shit, right? And I still am hanging on to hope that maybe, because in December of 2017, about 6 months before that is when I first got into crypto, and that was the most euphoric time of my life. I'm like, maybe, just maybe, it could be another December run, right? So we'll see. We'll see what happens. But, we've only got a couple weeks in December left. So, I mean, unless we have 2 gigantic candles to get us back up here to the top of this white channel at 121,000, and then maybe some over exuberance to get us to break out above it and sustain, with the broader macro structure, I don't know that that's going to happen, but that's the hopium. The downside is this all collapses and we have a downside, drawdown. And then, of course, you'd be looking at those same levels of support again, 88,000 down to 78,000, 80,000 range. And then, ultimately all the way back down to the previous all-time highs back in 21 around 69K.
Yeah, I've seen 80K being advertised as a bearish scenario and back to 125 as a bullish one. So that's...
Yeah, if we break down and sustain below that, then I don't see it happen. And quite frankly, I'm not a perma bull. I try to look at trends. If we did wick down there, I think it would just be a massive shakeout. Quite frankly, I still think that there's plenty of room to the upside. I think 2026 looks bright. I think we got a lot of good things coming. Let's jump over to Ethereum next, just to do the big boys first. We've got a
pop right now, actually. A little bit of a pump, slight pop.
It's the what the hex pump.
Yeah, Bitcoin. I mean, when I popped on this morning, it was 89,000. We're up to 92. So yeah, we got a nice little boost in Bitcoin. I thought initially when I was looking at Ethereum and Bitcoin earlier today, I'm like, oh man, sell the news, motherfuckers. It's like that. Pardon my language. The quantitative easing, tightening, whatever news that was out there today. I'm like, okay, great, sell the news. We're down. And then, it looks like that's already been gobbled back up, which is great to see just in a matter of hours from when I looked at it last. So moving over to Ethereum, we've got this descending orange channel that we've been in all the way since back in January of 21. You see the double tops here in May and then again in November of 21. And then we rolled over, found the lows in July of 22, chopped sideways, had some difficulty getting above its midline, ran up here in March of 24, again made an attempt in May of 24, finally again in December of 24 when Trump was elected. We did not get the nice little double top like Bitcoin did, and we rolled over pretty hard, little limp dick pump around inauguration, and then it was just down, until April. Found a new floor in April around around $1,400. And then we've not made a nice recovery. Also, per usual, I'm always looking for structure. And it looked like to me, this could be where we're going to start to curl back up. Found some action here around the midline of this new white ascending channel. had a nice little bull rally here in July, just like we did with Bitcoin. This one actually we stayed and maintained above all the way until October. So we didn't have a little dipsy doodle like we did on Bitcoin. So Ethereum was looking more bullish than Bitcoin at that point. But then it too followed suit. There was just too much stress on the system for it to be pulling down. But then, if you zoom in, this is a weekly as well. We've got, a nice recovery back up into this channel after wicking down to the 200 EMA at $2,600. Pop back up, and then we got 1, 2, 3 nice weekly candles in a row that are all green, looking really solid right now, soundly above the 100 EMA. This is on the weekly again. Remember, longer time frames, I have a lot more confidence in direction of things over time. And right now we're butting up against the 55 EMA. We wicked above it all the way up to the 21 EMA and pulled back down. So I would see maybe another push up to 3,500, which is the 21 EMA. That'll be your next resistance. Then ultimately we want to get above the top line of that Ethereum orange channel. That'd be around 3,800. If we can get and maintain above that, it could be one of these things where we just kind of worm, I think DJ can do the worm. So basically doing the worm across the top of the channel here for however many months. And then, we finally get the full measured move breakout. I'm still calling for, before it's all said and done, it could be, spring, it could be summer of 2026 at this point. I'm not sure. It could be as soon as January, February. $14,000 is where I'm looking for the upside move for Ethereum. So moving right along, going to the baby boy, the original, the OG Hex, EHEX, the firstborn, Richard's beloved EHEX. Here's the gigantic channel, right? Right here in May of 21 is when we first started hearing about the Pulsechain sacrifice. Had a nice run up, had that sacrifice in July. So this is where we kind of stabilized here. And then we had just the parabolic run in 1, 2, 3, 4, 5, 6, 7, 8 weeks about to get to the all-time high in September of 21. And then since then, you can see the structure here where we've butted up against that line multiple times, rode the bottom of that line multiple times, worked on the midline multiple times. The trend is a bad friend. The trend is a bad friend for the last 4 years. However, here's something to look at. You're always looking at slopes, right? And the thing is the slope of this was all pretty bearish, right? Real bad here. And then all of a sudden, if you just look at that yellow 21 EMA, it's starting to level out. Yeah, the slope is still down. However, it is leveled out, as this parallel channel that we've located also indicates. So we found support. We had this big dump back in May of 2024. We wicked back down to that same level in August of 24, ran back up, got stymied at the 55 EMA, worked our way back down, wasn't even all the way down to the bottom of that new channel again until July of 25. And then in the most recent drawdown beginning of December, we wicked off of that pretty resoundingly. Again, weekly channel, you can go down to a smaller time frame and see, how much time we spent at the bottom of that channel. And there were multiple days here where it had every opportunity to go lower and did not. So we had a nice recovery. I think that, potentially, basically, you're looking at more sideways action on EHEX in particular. EHEX is a bit of an outlier. It's kind of a counterplay to the other Pulsechain assets, because there's still that EHEX, PHEX debate, that people like to throw around. I think ultimately, long term, it's going to do fine, and it's going to go as Ethereum goes. I think that's what I see as we work our way through time. If we hold this bottom line here, which also curiously was the midline of the gigantic white channel that we've been in for 4.5 years, if we can hold this and start to curl back up and get to the top of our white channel, the measured move on that, I'm still looking at around 5 to 6 cents. And, I think from there, we just start working our way through previous supports and resistances. I still think the full glory doesn't come unless EHEX by itself beats 52 cents. With that being said, let's go over to PHEX. PHEX is really the one out of all the RH tokens in the recent drawdown that got beat up the most. We had this, I know I joke about it every week, but we had the big bull flag that's not a bull flag because the flag cannot be longer than the post. That's just kind of silly. But it was indeed a parallel channel. And we did indeed break down from that parallel channel. And as Papa loves to say, we move the girth of the channel either to the upside or the downside when we have a decisive breakdown. On this, I'm looking at it on a 3-day. Not only did we get the full measured move and then have some sustained time through 2, 3, 4 weeks almost of that through, let's see, we went all the way down to it November 9th and stayed in that range until November 30th. We had another little push down, so we overextended the run. I believe a week ago, I was saying that, hey, if this continues like this, I would be looking for support at the top of the previous white channel, or it could get front run. Roll it back. Nobody cares that much. But if you wanted to, roll it back. I said this could get front run, but look for support here if it really got ugly. So it got front run. We didn't go that far down. Got a nice wick up on that weekly candle. Now we've got a green weekly candle following up behind it, and it's wicking up, trying to get back into this previous channel. So we'll see where this goes from here. But it's nice to see that it's curving around on the weekly, looking more healthy than we have in a few weeks. So moving along to Pulse. Pulse was the one that got real scary. We set an all-time low. Nobody likes that. But as far as crypto stuff goes, double bottoms are not necessarily a bad thing. It kind of gives you an idea that, the worst is over. So we definitely got the double bottom back here in, the beginning of December when we first wicked down to the previous bottom. Yep. And then we pushed even lower still. So that was pretty scary, right? December 2nd. That was right at the time of the rates changing for the ProveX SAC. So I think that was the final push for people to go like, oh God, fear of missing out, right? So it's like, what are they going to do?
Sell their Pulse. Great idea.
Sell their Pulse, and we saw it. And CryptoSolve, who's another on X that I absolutely love for his analysis of things, proved it out on chain. And it's like, as far as extractors go, some of the validators have been extractors. Some of the big validators have been extractors, not only selling their yield, but actually reducing the number of validators. So I think that's good. It's like, hey, more for me, bro. Get out of my way. It's like, let me march up that leaderboard. It's like, so, but that contributes largely to these big drawdowns. Now, I believe those particular sell pressure points are sitting in stables or have bridged out. They were not immediately linked to the ProveX sacrifice, but there are plenty others that sold Pulsechain assets to chase that last day before the rates got shitty. So that, I think, explains a lot of this.
Yeah, also, I think it's to the tune of $5 million, right? Which is
it was like 5 or 10
in the current liquidity environment. It's quite
redunculous. So here's the fun part about Pulsechain. Big V-shaped recovery, right back up into this previous channel. The breakdown was damn near to the tick of the girth of the channel, right? The height of the channel. So we got right down here. I was hoping we wouldn't go that low and make a new all-time low, but we certainly did. Actually, wicked below the measured move. And then big V-shaped recovery on the very next daily. This isn't a weekly now. This is on the very next daily candle. Retraced all the way back up to the previous all-time low, chopped sideways for a couple days, and then boom, we went. Actually wicked all the way through the previous channel and above, tried to get to the 55 EMA on the daily, didn't quite get there. Big drawback down, but we sustained. That was huge for me. As soon as I saw that, I'm like, okay, we're back in business, boys. It's like, not only are we back in the channel, we stayed there. Like, I mean, this big drawdown was like, oh my God, are we going to give it all back and then roll over? No, we stayed in the channel. So that gave me personally a lot of confidence that we're going to continue up. And surely over the next few days, we've done some resistance, some sell downs. Because think about it, people are panicked. There are people, I mean, like me, it's like, at the worst of this, I think my portfolio is like down 60%. I mean, I'm an OG. I've been in since day 2 of Hex, and I've put in a lot of money, right? And it's like, for me to look at that and be like, oh my God, on paper, I was this value back at all-time highs, and now I'm literally into my own money by 60%. That's scary. I remember from my blackjack days, it's like when you're into your own, when you're playing with house money, it feels better all the time. Even if you've lost most of it back, you're still in house money. Soon as it starts cutting into your money, it gets nervy. And I think that's a lot of these candles you see coming back down. That's people like, get me the fuck out of here. It's like, that was too stressful. It's like, I can't handle it. I know people personally that capitulated, and they're like, and they're looking for any sign of life to get the rest of their shit out because they're just done. I mean, it was the last straw for them. I implore them, hang in there, man. I mean, don't liquidate everything. At least hang in some, because these are regrettable things. And I posted a new chart, if anybody that's following me on X, of the regret in selling Pulsechain chart. It's like I had Grok spin up a little silly chart for me. The levels of regret are going to be parabolic. It's going to be absolutely insane as things, because imagine being somebody that's selling in this range and then like looking at this in the next 6 to 12 months, you're going to fucking puke your brains out. Bingo. So now here's the real important turnaround on this. So we had the big wicks up and pull back down, wick up, pull back down. Now, what do we have here? This is the inverse of that. We've pushed up the wick is on the bottom. That is bullish, my friends. These two wicks on the top are bearish, like, we don't know, maybe, we're getting some resistance on top. Now the resistance is coming from the bottom, and we're nearing the top of that, and we're at the midline of this channel. So I have very high confidence that we're going to continue back to the top of this channel, and then eventually get ourselves up here to the 55 EMA, which is going to put us back up around quadruple 023. Not financial advice. I just see that that's where it's going. Something else I wanted to look at, and I know I'm trying to be as quick as I can here, but something
let's
that
go,
I found
because
interesting
Cairo
and
has
kind
to
of fun.
run. Let's
speed up.
Cairo has the runs. What?
Okay, I just
the runs.
I wanted to add in a couple of
stool softener kicks in.
My stool softener.
Couple examples here of how we had these big drawdowns and then big runs up, right? So like right here, this one, I did the bars pattern on that. And it's like, I was just curious. I'm like, okay, if we do that and I lay this in from the previous recovery in the matter of, by the end of January, if we did this kind of recovery like we did in June and this run up after this big drawdown, that puts us soundly in the previous channel and back up here to around quadruple 045.
Nice.
Now, if we do a run up, I believe it was I think it was further back, but there was a big drawdown. I think it was here. There was a big drawdown and then a big run up in a short order of time. If we do that one, and this is like crystal ball shit. I get it. I understand, but it's kind of fun to just imagine like what's possible, because people are like, oh man, we're so far down. It's going to take forever, if ever, that we get back there. Nah, stuff can happen quick in crypto. This right here is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Like this is like a 2 week, 3 week, or 3 weeks, 4 weeks, right? So this right here in the course of the next month could get us up to not only above the midline of this channel, but approaching the top of it. And ultimately where we want to go is the top of the orange channel. And this would be huge strides toward that. And that puts us at quadruple 07, which I think people would be elated with. But these kind of parabolic turnarounds have happened multiple times when we've had these drawdowns, multiple times back up. So it's not outside the realm of possibility that we have a serious V-shaped recovery and start moving. Ultimately, this all depends a lot on the macro. So moving right along, we got 2 more charts to go and we're out the door. Pulsex is the other one. That this one's looked really good for a really long time. This has been, as comparatively, relatively speaking, to the rest of the eco. It never got down to new all-time lows. Not even close, right? I mean, our all-time low on this was 5 zeros and a 7. So we had the same downward pressure that we did on everything else, but we didn't get beat up as badly, and we actually found good support on this descending diagonal here, the dotted blue line, which is the midline of the big orange channel. So we had this little white channel that we were working up through, did almost exactly the measured move down, recovered, turned around, wicked up through the channel entirely, very much like the Pulsechain chart that we just looked at. But this one, instead of kind of being along and riding the bottom of it, we've ridden the top of this channel and actually broken out above the top of that channel. So what I'd be looking for here is if we can sustain above the top of this channel, if we can close at quadruple 017 on the daily, I think that would be huge. If we can maintain that and continue moving forward, the measured move on this thing, let's unlock this little guy and move it up. Measured move on this, if we can get that breakout, would put us above the 100 EMA, approaching the 200 EMA, and that would get us back up into this level where we had a lot of price action previously. So I'd be looking at quadruple 02 on that. So, that would be the measured move I'd be looking for to the upside if we can maintain this, if we don't roll over. So as long as the macro is doing well and recovering, I could see, as Cairo pointed out earlier, we pump harder, right? When other things go, we go harder. So moving over to Ink, the clown of the family, the babiest of baby boys.
Everyone loves Ink.
Everybody loved Ink, right? It's like, it's so fun to sell it. So we had this white descending channel. Like when we were trying to, when I was pulling out what hair I had left, we had this yellow ascending channel for a long time. That made a lot of sense. And then when we started wicking below it and then actually breaking below it, I'm just like, oh God, what, I'm looking to make sense of things like I am in life. And so I threw on this channel and I'm like, okay, that makes sense. Let's see if it holds up. And we put this channel on way back. I mean, maybe in the beginning of November, and lo and behold, and this is on a weekly, week after week after week, we stayed on that bottom line. And then we had a nice dump right here, big wick up beginning of December at the end of the ProveX sack. Hey, sellers are like, hey, we're done chasing the ProveX stack now that the rate's not as attractive. Got a nice V-shaped recovery, and in the current weekly channel that we're in, the bottom of that channel was 68 cents. The top of that channel was almost $1. That's bonkers in a week, right? I mean, that's huge. That's a huge move in a week on ink. So it gives you the idea, like the sellers are exhausted. That's good. We'll see how that holds up. We're currently above the midline of this white channel going down. If we continue and break up, that should get us up into the $1.40 range and well within the previous yellow channel. So that's where I'd be looking at for upside. So goes the macro, so goes us. And if it's going to pump, we're going to pump harder. That's been proven time and again. Again, thanks to Cairo for coming in. I did that as quickly as I could. Hopefully I didn't put Peter into a coma. And
close.
Nearly.
That's it.
Nearly.
Let's get ready. Let's get ready for Christmas.
Look at him go.
That's wild. He's really taking the whole tree.
Nobody's going anywhere until he's done.
Determined little guy.
Made it.
Is that a beaver?
That's a beaver carrying a big
That's
old
nice beaver.
I always pay
That's a
attention when we show
nice beaver.
All right, you guys, real quick show schedule. Okay, so this was the ultimate episode of 2025. And what a banger to go out on here with Cairo on the show. We got 150 people watching live right now. Smash the likes.
Wow.
Follow up. Next week, we are doing, instead of What the Hex on Thursday, we're coming back again next week, but we will be on Twitch, and we do the Christmas special, the community's Hexmas 2025, around the same time here next week, Thursday. And then we just break. We go on a long hiatus over the
Long winter's
holidays.
nap.
Peter's very excited about that, so I'm hearing. And we will not come back until, I believe it's the 22nd of January. So it's quite the long
When Hex
hiatus
hits a
there.
dollar.
And rumor has it that Johnny Chaos might be our first guest in the new year back on the show, but
Right
he
on.
made it the condition only if Hex hits a penny.
Oh.
So
I thought he
it's in your hands. It's in your hands, you
If
guys.
it surpasses it,
Yeah, then he has to come. But the question is also E-hex or P-hex. So which hex are we talking here?
not combined.
Is it combined? Combined?
Yeah, combined. He
Combined,
doesn't
Johnny?
probably
Combined?
not
Either a
count, but
10x or
we'll
a
see.
3x from here.
Can we negotiate?
That's
nothing.
right.
That's a sneeze in crypto. It's a sneeze.
Hopefully, it's not
that's-
my entire crypto portfolio value hits a penny. That would be bad.
Yeah, that'd be terrible. So if Hex hits a penny, we might have Johnny Chaos or not. If not, he will continue to be on strike. So he said, but we'll see about that. So happy
With like a picket
holidays.
sign strike, like marching in front of somewhere. I will.
Yeah,
not
like with a
do-
shield and like walking in circles around town square.
Nice.
Hex at a penny. Hex at a penny. Stop selling, you cry factors.
We need to bring that song back, dude. That Hex to a
at
Penny song.
Yeah,
I love that
absolutely.
song.
Oh, I love
Banger.
that song.
Absolutely.
Post Polar, shout out.
So happy holidays, you guys. As Cairo, thank you so much for coming on today. And also thank you. I'm not, again, elected to speak on behalf of the Hex community, but I do it anyways. Thank you for all the work that you are putting in, showing up at these spaces with Tam supporting and sharing your wealth of knowledge. As we saw today, you know this stuff. You've written books about it. You like to take keen interest in public speak and trying to educate people. I also wanted to show your YouTube channel. That's also up and running. So if you want to hear more from Cairo, it takes a lot
I'm
of
a
pride in
subscriber.
his channel. Yeah, you're subscribed. I'm subscribed. You see here, subscribe.
Yeah.
And the thumbnails and all that stuff. So you take a lot of pride in all of that work. So thank you very much for that. What is the best way for people to get in touch with you? Where can they follow up on your stuff, Cairo?
So YouTube, Substack, or X, it's all Reinvent-Ideal. That's the handle there, or reinventideal.com has everything there as well. You will see me coming up Tuesday at Tam's Spaces that are at 7 p.m. on East Coast time.
Yes.
And then the day after, Wednesday, you'll see me at my stream, which will be 5 p.m. East Coast time as well. We'll be talking about the drama that is yet to happen with the yen carry trade and how that could cause new lows or wreck the markets, or maybe it's not a thing at all. The Bank of Japan meets on the 19th, which is next Friday. That's their version of what we went through yesterday with the Federal Reserve. And this is a lot more important than the Federal Reserve's meeting, just because of how much of the world's liquidity and the world markets, investment markets, depend so much on Japan doing what they do. And I will break that down and explain that for everybody on my next stream coming up on Wednesday the 17th at 5 p.m.
Beautiful. And all the links to that are down in the description below. Again, next week, you guys, is the Hexmas special. Please join us on that. Papa B will be my co-host as the elf or the Grinch. It's still undecided, isn't it?
It's the Grelf.
Grinch.
The Grelf.
The Grelf.
All right, you guys. Thanks for tuning in, everybody. And happy holidays.
Yay.
Outro.
Yay.